Hey everyone, welcome back to the channel. Today we're diving deep into the world of technical indicators. Whether you're a beginner or an experienced trader, understanding tools like the RSI, MACD, and moving averages is key to becoming a pro in technical analysis. These indicators can help you spot trends, identify entry and exit points, and make better trading decisions. So let's break them down. First up, we've got the RSI, or Relative Strength Index. The RSI measures the speed and change of price movements, helping you gauge if an asset is overbought or oversold. It ranges from 0 to 100, and typically, we use the levels of 70 and 30 to help us make decisions. Let's break it down. When the RSI crosses above 70, it suggests the asset is overbought, meaning it might be due for a pullback. If it crosses below 30, it indicates that the asset is oversold, which could mean it's due for a reversal or upward movement. Now, don't take these signals as guarantees. They're best used in conjunction with other indicators, but they can definitely give you a heads up when the market might be overextended. Next up, we have the MACD, Moving Average Convergence Divergence. The MACD is one of the most popular indicators out there because it helps you identify both the trend and momentum of an asset. The MACD consists of two lines: the MACD line, which is the difference between the 12-day and 26-day exponential moving averages, and the signal line, which is a 9-day EMA of the MACD line. The key signals are when these two lines cross. When the MACD line crosses above the signal line, it's a bullish signal, meaning the price could be on the rise. When the MACD line crosses below the signal line, it's a bearish signal, indicating a potential drop in price. Also, don't forget about the histogram. It shows the difference between the MACD line and the signal line. A growing histogram means momentum is increasing in the direction of the crossover, and a shrinking histogram suggests momentum is weakening. Use the MACD to confirm trends and spot potential reversals. Just remember, like the RSI, it works best when combined with other indicators to avoid false signals. Finally, let's talk about moving averages. These are probably the most commonly used indicators in technical analysis. Moving averages help smooth out price action to identify the overall trend. The two main types are simple moving averages, SMA, and exponential moving averages, EMA. An SMA is calculated by averaging the price over a specific period. For example, a 50-day SMA takes the average of the closing prices over the past 50 days. It's great for identifying longer-term trends, but it can be slower to react to price changes. On the other hand, the EMA gives more weight to recent prices, which means it reacts faster to price movements. This makes it great for catching shorter-term trends. Traders often use combinations of both, like the 50-day SMA and the 20-day EMA. One popular strategy is the golden cross and death cross. The golden cross happens when a short-term moving average crosses above a long-term moving average, typically a bullish sign. The death cross is the opposite, when the short-term moving average crosses below the long-term moving average, signaling a potential bearish trend. Moving averages can also act as dynamic support and resistance levels. When the price is above a moving average, it tends to act as support, and when it's below, it can act as resistance. So, how do we use these tools together to trade like a pro? The key is confirmation. You don't want to rely on just one indicator. Let's say the RSI shows an asset is oversold. The MACD gives a bullish crossover signal, and the price is above a key moving average. That's a strong confirmation that the market might be ready for an upward move. However, always keep in mind that no indicator is 100% foolproof. The market can be unpredictable, and it's important to manage risk and have a trading plan in place. Alright, that's a wrap for today's video on how to use technical indicators like a pro. We've covered the RSI, the MACD, and moving averages, three powerful tools that can help you make smarter trades. If you found this video helpful, don't forget to hit the like button, subscribe, and turn on notifications so you never miss an update. And as always, drop your questions or comments below. I love hearing from you. Happy trading, and see you in the next one.